Welcome back to the morning show here on the Rise News. I'm Adesua Omorwan.
I'm Rafal Yosini.
And I am Shaiton Atigari. Let's get straight into it. Since the passing of the Executive Finance Bill sent to the Nigerian Senate by President Muhammadu Buhari, amid controversy over the 50% increase in value-added tax from 5% to 7.5%, Nigerians are still reacting to the bill.
Well, indeed, some of those opposing parts of the provisions in the bill are Manufacturers Association of Nigeria, the Institute of Chartered Accountants of Nigeria, amongst others, who were present at the public hearing by the upper chamber of the National Assembly, which was also boycotted by their colleagues in the lower chamber.
The Lagos Chamber of Commerce and Industry, LCCI, also kicked against the passage of the bill, warning that the upward review of VAT will have adverse effects on consumers and businesses because of the negative impact it will have on the sale of goods and firms' profit margin and weakening of the consumer purchasing power. So joining us now to discuss Nigeria's Executive Finance Bill is Yomi Olugbenro, partner and West African tax leader at Deloitte. Yomi, I think the narrative a lot of people are pushing about the narrative of the fact that as a small company in Nigeria, if you earn less than 25 million, you're exempt from company income tax and even VAT.
Right. Yeah, you're right. So the finance bill is more than the VAT amendment bill. And even the VAT amendment section is more than just the increment. So there's a whole lot that's in there. There are 7 laws that have been amended. And this bill isn't introducing any law, any new tax law. It's only making amendments to many of the provisions. And most of the provisions, if you look at them very critically, are actually very beneficial to the business community and to the taxpayer. So I think the narrative around somebody's kicking against it is not appropriately situated. What actually happened was that there was a hearing conducted by the Senate. And as you will expect, during the public hearing, memoranda was submitted, contributions were made as to what aspect of the provisions will you rather want amended, what clarifications will you need, and everybody submitted memoranda. I wasn't there, I also make presentations in terms of some good tweaks we would rather want to see with the amendment. But overall, this bill contains a lot more positive than, the 50% increment that we're talking about. And you mentioned one of them, which is the MSME. So the micro and small businesses are one of the lucky winners from this bill. This bill introduced zero income tax exemption for micro businesses. So if your annual revenue is 25 million naira or less, you will no longer pay companies income tax. The same group of companies are now excluded from registering for VAT. So you don't have to be saddled with the burden of monthly filing, monthly returns, and the exposure to interest and penalty if there's any infraction, in that particular process. If you're a medium player, meaning your revenue is more than 25 million, but you're below 100 million revenue cap, you have a reduced corporate income tax rate. From the 30%, it's now 20%, and I mean, virtually every sector, the insurance, the bank, the large corporates also have, one, palliative or one amendment that would be suitable for them, or the other, issues like minimum tax, it's been revised to make it a lot simpler, to make it a lot easier, and the disadvantage it puts on companies making losses, that's been taken away. There's an obnoxious section 19 that we always talk about, dividend tax, excess dividend tax, as you call it. If in any year prior to this bill, you're paying dividends to your shareholders that is higher than your taxable income, the law, require that you pay an excess tax on the differential. That's going away. Same with insurance. So, and I can go on and on. So I think the point being made is that there's a lot more for everybody, even on the positive side in this bill, than just the VAT increase.
From what I hear you say, the small businesses are the biggest winners in this changes to the tax laws that we're seeing. But in the history of mankind, nobody's excited to pay laws. But it's something you have to pay. I'm sure you are not excited to pay your tax as well, but you have to. And so revenue generation is still a challenge for the government, and the growth projection still fragile. is this indicative of tougher times for the small income earners? I'm not even talking about the businesses now. I'm talking about the homes. What sort of impact are we going to be seeing in the homes? Because I like to break it down to the homes.
Yeah, no, I agree with you. So nobody likes to pay tax, but we all do that because we know that it's someone funnily say tax is a subscription you pay to live in a country, and your childhood period is your trial period. It's a free trial period. So we all have to put something at the center, to provide the amenities that everybody need. I know it's tough time, and I think what the bill did is essentially to balance conflicting needs, if you like. On the one side, government need more money. There's agitation for wage increase. There's agitation for more investment in capital spend, and all of that. There's a limit to how much we could raise from the oil side. Our daily oil production has been below 2 million barrels for quite a while, selling about 60, 63 or within that range. So there's a quantum of how much we can get from that side. So we need to go on the other side to see how much of non-oil revenue we can make. But at the same time, we recognize the fact that this is an economy growing at 2%, 2.2%, 2.3%. We out of recession. There's still a lot of challenge on the on the manufacturing sector. The real sector, it's not as healthy as it should be. So you want to raise revenue from the same sector, so you always need to balance it all out. So what this bill is seeking to do is give a little to the to the tax-paying side, and also let the government also get some. Particularly items of taxes that are a lot easier to collect, a lot easier to administer. So if you balance this bill out, government is essentially providing some cushion on the direct tax side. So from a personal income tax or from a company income tax, there's a lot of gain, on the taxpayer side. So higher disposable income, because of those amendments coming on dividend tax, to insurance company, to MSMEs, and the increment on the disposable side is applied on the spending, which can help to keep reflating the economy. And in the process, government is able to get a lot more from the consumption tax, which is the VAT. So, and that's ideally what you will expect in any sane economy. So, but the truth is that this bill will not resolve all of our numerous tax challenges.
It's not a silver bullet.
It's not a silver bullet. So, but it's a good way to start.
Okay, like you just said, it would not resolve, all of our tax issues. But I'm curious to know, we have, people have complained about double taxation for years on end. Does this finance bill address that at all? And also, the economic advisory team, they've been very quiet. Where are they in all of this?
Well, I will have to disappoint you. This bill will not remove the multiplicity of tax issue. All right. The only thing it hasn't done is to increase that burden. So, like I did mention, no extra tax is being introduced by this finance bill. Obviously, there are other things happening on the sideline in terms of some tax-related bills that are pending with the National Assembly. We don't know how far that will go and how quickly that will be passed. And some of the other conversations we've had as far as the additional taxes that have been introduced, it's concerned. So, this bill, it's not addressing the multiplicity of the tax issue. So it's still a challenge that we need to deal with heads on. It's still an area that, hoping in the new fiscal year, there will be a lot more effort around harmonizing and doing some things in that particular regard.
That fiscal year takes effect from the 1st of January 2020. That's about 35, 36 days away when this bill, will kick in. A lot of people in the government are saying these are going to be the silver bullets to be able to move the threshold of tax-GDP ratio to at least the sub-Saharan African region threshold of about 15-16%. Currently, we're doing 6% tax-GDP ratio. Benin Republic is doing 15%. A lot of people are saying this is the joker. Is it?
Whoever says this finance bill is the joker to take us to 15% is daydreaming.
That's what government is saying.
So the gap
is,
it was part of the process towards taking us there, but this won't take us there. Africa's average, by the recent release by OECD, is 17.2. OECD average is nearly 35% tax to GDP. We're below 7%. You said 6, so 6, 7, or thereabout. increase of VAT from 5% to 7.5% will not get Nigeria to a 15% tax to GDP ratio, but it will be a critical step towards doing that. So there's a whole lot that still needs to be done around tax penetration.
What are those things?
So
what are those things? Because it's as if since the voluntary asset declaration scheme, the VADES did not work, then maybe this might just be a subtle form, rather than saying, okay, everybody comes. So what are other things?
Well, I don't think it would be fair to say the VADES didn't work. Again, there are a lot of levers that the government need to pull at the same time, continuously, consistently, to be able to get us there. So one of the outcomes of the VAT is the need to expand the tax base, for example. And there's an effort going on in that particular regard, so with the National Taxpayer ID. So if we move the total number of tax-registered people to the 14 million that it was about a year or 2 years ago, and we move that to, what the current exercise is projecting, we may be hitting, say, 40 million, or thereabout, even if we hit 25 million or 35 million, because sometimes statistics are funny to throw around in the country. That will have taken us a notch higher in terms of tax penetration. There's a whole lot that is happening on the FRS side in trying to curb evasion and avoidance, by ensuring that every registered legal entities, who's got CAC numbers, who are having banking transactions, everything can be put together in a database, and at least for starters, let's get everyone who is liable to pay tax in the net. And then we strengthen enforcement and compliance, mechanism, not the half-hearted, harassment, that sometimes this form takes. So if we continue on this trajectory, so you realize that we bring in more people, and as many people as are in the net, it's a lot more difficult for them to falsify their information or to disclose, half of their revenue. There are issues. There are efforts from the Global Forum, the BEPS initiative. Nigeria has signed common reporting standard regulation, for example, which entitles Nigeria to share and receive, information about taxpayers. So the same way that Nigeria is collecting information about foreigners who are making money in the country and sharing it with their countries of residence, the same way from over 100 countries, Nigeria will be entitled to receive the same information. So the government the FIRS now have a database to compare the disclosure that individuals have made with additional information coming in from the rest of the world. And if you do that, you realize that the capacity of taxpayers to shift profit or to be less truthful, with their earning reduces, and so we can move, the accuracy of revenue being reported and the taxes being generated a lot higher. So those processes have to be going on, while at the same time government realizes that the enabling regulatory framework itself, beyond the tweaks that we're doing through finance bill, require a holistic change. We need to change those laws. What we're doing currently is to use low-hanging fruit. What quick, modifications, fixes can we, make on those laws to at least make it easier, So now those amendments is helping us to get into the area of digital economy. We're taxing non-resident companies, that are making profit in Nigeria, but the existing regulatory framework doesn't allow us to tax them, because the old provisions are brick-and-mortar provisions, but nobody do brick-and-mortar business anymore. So you have a lot of businesses making a lot of money in the economy, but when you look at the codes for how do you determine whether they are liable to tax in Nigeria, they are not cut. So now the provision is now being amended. If you have significant economic presence in the country, you're now liable to tax. So all those on the digital economy making a lot of money will contribute. So all of those processes, going on simultaneously will get us there. Okay.
We want to land on that thought, because I was going to put in here that this is an annual exercise in some countries to review their tax laws, but we'll come back to talk some more about this when we return. Yomi Olugbenro will still be with us after this break. Join us again. Welcome back to the Morning Show here on the Rise News, and we're still talking about the finance bill. Yomi Olugbenro, partner and West Africa tax leader at Deloitte, is still discussing this with us. Thank you so much for staying with us. You know, during the military, we did have something like this. It was called the Finance Miscellaneous Provisions Decree. But we haven't seen this in a long time. And then President Muhammad Buhari is reintroducing this. And I was saying before that break, you know, this is an annual exercise for a lot of countries where they review their tax laws and address it through a budgeting process. You've talked about the issue of multiple taxation and evasion of taxes. But there's the issue of trust deficit. Do you see this as something that would curb or help bridge that trust deficit gap that we have at the moment?
All right, so you're right. Your intro that we last had this kind of an initiative during the military era, that's quite correct. So in different parts of the world, submission of annual appropriation bill or your budget, it's usually supported by whatever changes you want to make or tweaks you want to make to your tax law. And this is how to make the tax environment responsive and dynamic. You make changes to respond to what you're feeling in the economy. Sometimes you need to lower rates so that, you can cushion the effect of certain pains. Sometimes you need to raise it. Sometimes you need to use it to control consumption or encourage the consumption of certain goods. So you move things around in that particular way. So the commitment we've had, from the finance minister representing the executive is that at least this will now become an annual exercise. And I'm particularly excited about that. So if we're waiting for laws to be changed and it's taking some time for us to do that, we can use this process to actually, fine-tune the law and make sure that they are in tune, with the reality. But as to your other question, whether this will resolve the challenge of trust deficit, I don't think so. I don't think the trust deficit, it's just from the inadequacies of the tax law. I think it is the general perception of Nigerians and taxpayers that the government can be a lot more transparent, the government can be a lot more accountable, the government can, and government officials can lead from the front, in terms of showing leadership by example, by also being transparent by their own tax returns, so by their own commitment to discharging their civic obligations. So the people that responded that they don't trust are saying, we're not confident that the tax revenue are being applied judiciously. We're not happy with the inefficiencies we see in government. We're not happy with the way we see the national budget and the quantum that goes into recurrent and salaries and perks of those who are, who are leading the different agencies of government, whereas the portion that's supposed to deal with the critical infrastructure, the capital expenditure side, it's either low relative to recurrent or even, partly executed. So those are where the issues are. Those are what we needed to fix.
But the number of those people, they're quite high. I mean, there was a research done recently that says 8 out of 10 Nigerians will totally evade taxes. They will not want to pay. And in furthering, those questions, in a country where the people know, based on available evidence, that the government still spends about 65% of its tax revenue to service debts. Do you think they will want to pay?
Well, so there's a whole lot of issues. Sometimes statistics, it's also a derivative of whatever number that you put in there. So government can also actually use that same argument to justify the need to increase tax revenue. So because the quantum of debt itself is not necessarily the issue, but the base of the tax revenue that you are relating it to. So the budget submitted for 2020, for example, if you look at the aggregate expected income of about 8-point-something trillion and the amount budgeted for debt servicing, maybe 2.4 or something, that's about 1/3. Now, we can take both two variables. Is the quantum of debt relative to our economy, relative to what we should be doing, is it too high? Or is it the denominator, which is the revenue, that is too small? So, and government can use that statistic to say, that's exactly the reason why we need to increase, the revenue, we need to get more people to pay, and all of that. I think from a trust deficit perspective, while the complaints around the proportion that goes to recurrent and the proportion that goes to debt and all of that is a valid argument, I think more worrisome is a perception that there's a lot of inefficiencies. We're doing a lot in cleaning up, the system from corruption, and all of that. But test the pulse, of an average Nigerian and see whether they are now comfortable that we have moved to the point where, that trust issue has been eliminated. I doubt if that will be. So, and that will require a lot more consistency, a lot more focus, a lot more transparency. Agencies of government, state government across the country needs to be a lot more open, about their budgets, about their finances and all of that. This is the only way to encourage everybody to know how much we're making and how much we're applying it, and those are the ways by which we can bridge the trust deficit issue.
Speaking on trust deficit, there was one of the points from the finance bill that stood out for me that says that the remittance of VAT should now be on a cash basis, and that's the difference between the output VAT collected and input VAT paid in the preceding month. Now, in a nation that is trying to go towards the cashless policy, I find this interesting that they now want to start collecting VAT in cash. What's your take on this?
No, not exactly the way you had explained it. So, prior to this amendment bill, the way the VAT law operates is that once you issue an invoice, when you make a sale, whether for good or for service, irrespective of when the customer pays you, you are expected, based on the law, to pay over to the government no later than the 21st day, 21 days after that month of invoice, whatever VAT you have charged on your invoice. Now, remember, sometimes you make sale and you collect money immediately from your customer. Sometimes the customer owe you for a couple of months or even sometimes a year. So the law, as it was previously worded, practically expect taxpayer to go borrowing to pay government if your customer hasn't paid you. So it's on an accrual basis, because once you've invoiced, you pay. Now, this law is saying we realize that that's punitive. We will no longer ask you to pay VAT on collections that you haven't made from your customer. You will only pay VAT once your customer has paid you. So, and that's what it means by cash basis. So cash basis means only what you collect is what you remit. It doesn't say it will be exchanged via cash. It will still have to go through the banking system. So it's no longer on paying on customer that are owing, but you pay only when the customer had given you the money.
You have said that this is not the silver bullet that we're all hoping for. But there are also 7 tax laws that are being reviewed here. But the most contentious happens to be that of the VAT. And then some perhaps will rate the second as the stamp duty. In your opinion, what would you have liked to see this finance bill correct that it didn't at this time?
Okay, so there are many things I would have wanted the finance bill to correct, but I'm also very practical and pragmatic, and we need to be pragmatic about the issue. The finance bill won't contain everything. So in a VAT, for example, rate was raised, registration threshold was introduced, to take off the small business. That's a good one. Cash-based remittance, was introduced. That's a good one. We expanded, the eligible exempt items, particularly the basic food item. That's a good one. One additional ask from the VAT that we couldn't get with this one was to actually, expand the list of input VAT eligible for set-off. It's the major difference between the Nigerian VAT system and the VAT that is operated in different parts of the world. So almost in every other jurisdiction where the VAT system works, every VAT you incur, either on capital spend or your OPEX or the goods and services you're trading in, you are entitled to deduct them from whatever VAT you charge on your invoice when you are paying, when your customers are paying you. So the one you collect from your customer is the output VAT, the one you're collecting.
That's the VAT return.
That's when you're doing your VAT return. So what you collect when you're making your invoices is the one that comes in. What you pay when you are paying your vendor, your overhead, buying the input, buying the trading stock, it's a cost to you. In different parts of the world, you will deduct everything you had paid from what you have collected before you remit the balance, the net, to the government. In Nigeria, the eligible input VAT is almost technically limited to what you incur on trading stock only. So if you have incurred VAT on a capital item, the law will say add it to the cost of your capital item and, deal with it the accounting way and claim the capital allowances. If you have incurred the VAT on rent or service, add it to the cost of those expenses, charge it to your income statement. It has a way of increasing your cost, on the income side. It has a way of, putting cash flow pressure, on you. So we didn't have that amended in this. That would have been one fantastic, change that, but you must recognize that government was trying to balance which provision will get us more money, having given in to some number of rebate and relief on the company's income tax or the capital gains tax, and the rest of the laws.
Real quickly, I just want to talk about the process. I think you made mention of that point, the process, how difficult it is to pay. There's a lot of drudgery in the tax payment process. Even as a small company, to get your TIN number, it's big wahala. It's a nightmare. For them to ratify your TIN number for you to now go ahead and pay. We have seen all sorts of schemes, by the FIRS, the fact that you can pay your taxes online. But it looks as if those things are not viable. It's still very, very cumbersome. So one would have thought that there should be a one-stop button where you can pay all your taxes using technology. Yeah,
so we still grapple with a lot of challenges, and the tax system isn't existing in isolation. So we're faced with the same base of infrastructure issue, that we have. So the tax authority are not the one, doing our road. They're not the one dealing with power, and all of that. And the system itself needs to be situated within that particular context. So it's understandable that many of those or some of those challenges are still there. But we must also be willing to appreciate, little progress. I think things are moving forward. I think it's not at a pace that many of us would love to see it. But from FIRS to many of the state internal revenue services, there's a whole lot of effort going around at digitizing. Lagos State is very heavy with their e-tax. They are testing it and asking everybody to test run and give them feedback so that this process can be fine-tuned. FIRS is doing a whole lot so that you can file your returns online, make payments online.
We'll quickly come back to you and talk about these issues even more when we come back from this quick commercial break. Stay with us.
Welcome back to the morning show here on Arise News. We still have in our studios Mr. Yomi Olugbenro, a partner and West Africa tax leader at Deloitte. Now, before the break, we were talking about a one-stop shop for, all taxes to be filed and paid for. And, still talking about, digitization. One thing that struck me was the fact that this finance bill actually now allows for email correspondences between the taxpayer and, the tax collectors. I find that quite interesting that we didn't have that before. But to buttress that point, are there any other ways that we can embrace technology and, e-services to help tax paying easier in Nigeria?
All right, so it's interesting. So the bill actually did, officially introduce electronic means of communication into the bill. And the reason why that was there wasn't that prior to now there hasn't been email. Obviously, for the large corporates, a number of interactions with the tax authorities are still manual. You want to submit your returns, and all of that, or you want to challenge a query, or you want to respond to a finding, maybe a tax audit finding. So many of those things are still, largely, through the manual system. Now, but over the years, the increasing use of email correspondences has been there. When cases are taken to court, particularly when it comes to tax filing, there are due dates for certain, if you're making complaints, or you're disputing an assessment, the law will give you, a minimum number of days or maximum number of days within which you have to do that. Otherwise, you may have run foul of the law. Now, if you go to the court and there's no provision, for example, so let's say you send, a paper returns and then you send an email within the same process. There could just be a technical knockout in the law, in the court, if the tax authority says, we never received it, so you send an email and the court is like, well, according to the law, this is how that response should have been given. So what the changes is introducing is that is then officially recognizing that if you send an email, within that same approved period or use it to file your return is now recognized. So it's all part of the process of digitizing the process. And I was talking about it earlier that in as much as we still have challenges with the infrastructure, all right, with the platform, and all of that. A number of taxpayers will complain how they have to, rise up in wee hours of the night because they want to upload certain returns and all of that. So those challenges, some of them will still be there because of the entire system itself. But a whole lot of effort are also going in. If you pick FRS, for example, the process of filing many of your returns, whether it's VAT or annual returns, are now possible through online. Is it seamless? Probably no. Is it as efficient as it runs in many other parts of the world? Probably no. But it's a step ahead. If you want to apply for your tax clearance certificate or you want to make payment for your taxes and get an automatic receipt sent to your email box, those are not things that we used to have maybe 5 years ago. So those are part of the steps that the government is making, particularly the tax administrators. And I was talking about Lagos State earlier. I mean, it's a poster state in terms of states being ahead in terms of doing what can ease the process of paying taxes. So a lot of efforts are going on around digitizing, around taking everybody on the online portal. So if we continue along this path, you will expect that over the next 1-2 years, the process we will have learned from some of the process, we'll have tweaked what we needed to tweak, and perhaps the process will be a lot more seamless and hitch-free.
Well, a step in the right direction, you have said. I mean, it's over 50 sections and 80 amendments in this initial bill that has been sent by the president alongside with the 2020 budget. Well, let's look at the financial implications. You've talked about the insurance sector, how this will affect them, small businesses. The digital economy, what are the likely impacts for this? Because we also know that it's taking effect in January 2020.
Right, so...
Have we thought this through, the financial implications it's going to have on the digital economy? Because most Nigerians, I mean, young graduates, are taking advantage of the digital space to employ themselves and many others.
Well, so the changes that will happen to the digital space, if you look at the rest of the provision, particularly if you go back to whether it's VAT, or the company's income tax, and the exemption or the relief or palliatives, if you like, that's been given to the really small or micro businesses, then you can understand that the real struggling, young, upcoming Nigerians that are trying to get something doing already have themselves covered in a way. So if you are on the, operating within the digital space, perhaps the only other challenge that you continue to face is the fact that if the transaction is liable to VAT and you are, you're buying a service online from someone, you're not going to enjoy that relief. You continue to pay it as you've always done. But as an entity yourself, if you have a small business and you're just trying to do online business or e-marketing, and all of that, and you fall within the threshold of the 25 million, you're already covered. You're not going to pay company's income tax, neither will the Revenue Authority be expecting you to come register for VAT and filing the annual returns. I think the bulk of the expectation from what the talk around digital space is all about is actually getting the large players, particularly the non-resident companies who are making a lot of kill within this economy, but the existing regulatory framework was not worded in a manner that would bring them to tax. So if anything, I think it's Nigeria's time to take a fair share of the revenue that non-resident players within the digital space are making within the economy and let them contribute just like every other Nigerian and every other non-resident company who are the traditional brick and mortar type of business. So let them pay their taxes. So that's the kind of effect that I say.
Let's talk about withholding tax. and the general outlook of this will have a withholding tax. I mean, because it's been that big elephant in the room a couple of times. A lot of people have talked about, is there a need for it? I mean, what are the prospects about this law addressing the case of withholding tax?
Right, so from the general corporate taxpayer and individual taxpayer that we often use when we talk about withholding taxes, nothing specific is changing as far as that system is concerned. The real change is with the oil and gas sector, where prior to now, distribution from petroleum operation in form of dividends, it's not liable to withholding tax. And government thinks we can make some more money from this particular process, just like we do from every other dividend that is paid out. So there's an amendment in this bill that now says withholding taxes will be applicable on dividend distribution by petroleum from petroleum operations. All right. So, but if I come back to the real withholding tax issue, which you're talking about, I think the real complaints about that is with the administrative burden, of the process of paying, the process of getting access to your credit because it was manual at the process, and the process of getting the credit notes distributed to the people who have suffered the withholding tax so that they can make use of it. That's refinement, or the refinement needed in that process has actually been happening over the last 2 years. So it's a lot simpler, it's a lot easier than it used to be 24 months ago. Now, if you make a withholding tax payment online using any of the online channels that we spoke about, you're going to automatically get an e-receipt sent to your inbox. So you don't need to go to the tax office to go and queue for paper receipt that we used to do. The individual who is suffering the withholding tax gets his account automatically credited and gets the withholding tax credit note emailed, to his or her inbox. So those initiatives have actually helped to simplify a little the process. There's still a lot of legacy challenges and accumulation that we've brought from the prior years that haven't been fully fixed. Hopefully, as we move into the future, it will be resolved.
Speaking of legacy, I just quickly wanted to talk about the fact that if taxes are sacrosanct in any economy, this new finance bill, does it have regulations where you can penalize people, despite the fact that they have constitutional immunity, that don't pay taxes or file tax returns? Could your tax returns be used as a threshold to be able to determine your, filing your papers for INEC, for instance? Because that's really very important. I mean, to my chagrin, somebody that was running for a high office in this country once said he didn't pay up to 20 million naira in taxes annually. And it's in public glare, the wealth the person displays. And that's to everybody's chagrin.
Right. So this finance bill didn't specifically make, any insertion that will address that. All right. But that doesn't mean that within the existing framework, we don't have means to review the level of compliance or the level of or the amount of taxes a particular individual should be paying. I don't even think we need a finance bill to be able to do that. We have existing income tax acts, whether it's corporate, whether it's individual, that can, it can be used. And that's exactly what people talk about when they're talking about trust deficit. All right, so
why wasn't it used all this while?
So that's exactly the issue.
Because that's the shocking thing. Because I don't know if a lot of Nigerians were shocked, but I was shocked to my dismay to see that with the kind of magnitude of wealth you suppose that person has, he doesn't pay up to 20 million naira in taxes annually. And there are not up to 100 Nigerians that pay 20 million naira in taxes yearly. Not up to 100 Nigerians.
Well, I don't know if the number had reduced.
I think the number has increased.
Not 1,000. It's
not of should it say that?
We have about 900 and something, 941 or thereabout. But that's
pay more than 20 million naira.
Pay about 20 million naira in the whole country.
But in the whole country, of 200 million.
That's absurd. So, and that's exactly the area where the politically exposed people and those who claim to have made a lot of money before getting into the public space can actually strengthen the public trust issue that we're talking about. So if we know that those who are leading us or those who are making legitimate income by the way we assess their earnings and all of that, pay a fair share in taxes, then you and I then know that there's no hiding place for us. And we just have to do exactly the same. So we need to see a lot more leadership from the front. We need to see a lot more, willingness, to let the tone at the top speak to the same charging, that we're pushing down on the rest of the citizens. So maybe we get to that point where everyone who is vying for political office, for example, we're able to see, and relate their income to the amount of taxes, that they have paid. So that will encourage a lot more participation. That will encourage a lot more willingness, on the rest of the public.
So what are the penalties? I mean, to go after them. I mean, we don't have strong provisions that people go to jail if they don't pay their taxes. I mean, tax evasion is big deal in some other parts of the world. People, I mean, even footballers go to jail. Everybody goes to jail.
So does the finance bill specify?
The finance bill didn't specify, but I'm saying there are existing provision that criminalizes tax evasion.
What are those provisions?
So if you found culpable and you take him to court and it is decided that you have evaded tax, there are terms of imprisonment, there are terms of financial penalties.
We'll quickly go on break and we'll come back and talk about various state penalties as regards that. Stay with us. Welcome back. Still a morning show here on Arise News. And we're still talking to Yomi Olugbenro. Before we went at that break, we're talking about penalties, very steep penalties. And you were talking about, for tax evasion, you were talking about legal provisions as regards to that.
That's correct. So I was saying that the finance bill didn't introduce a new criminal penalties, different from what we already have. Of course, the financial penalties in a number of the laws were increased. So, for example, if you don't file your VAT returns on time, if you don't file your income tax return on time, whereas you have maybe a 5,000 naira monthly penalty for VAT default, now you have about 50,000 naira. So those financial penalties were increased. But the existing legislations actually did contain criminal prosecution against officers of companies and individuals that are found to have evaded tax. But the trick is that the Revenue Authority can sit in its office and accuse you of criminal prosecution, be the judge, and take you to court. So and take you to the prison. So you still need to go through the legal process, and that's where the entire system have to be put into perspective when you're discussing this. And it isn't just tax issue. So whether it's election offense, or whether it's a tax offense, or whether it's libel or commercial issue. So there are provisions within various law that entitles either the government or the tax to take whoever has offended to the court, and until the court actually decide that you are guilty of a criminal offense, you can be in jail. So we can't fix that issue unless, we widen it all up and look at the entire judicial process. So how many people have been prosecuted for tax offenses? How many people have been prosecuted for electoral offenses? How many people have been, prosecuted for other, corruption cases, and all of that. So that's the whole broader spectrum. Very quickly,
before we let you go, Mr. Olugbenro, a couple of people that are kicking against this finance bill already, parts of the provisions, for instance, the VAT, which we have also reiterated, seems to be the most contentious. People like the LCCI, Lagos Chamber of Commerce, we have NECA, Consultative Association of Workers, Employers in Nigeria, Manufacturers Association of Nigeria, and some others. But in your opinion and in what you have seen so far, how would you say this bill has been received?
Okay,
especially in the business community.
Right. So I think the narrative about the kickback against the bill is not being properly situated. There is a lot of, cheer from consultants, from the business community about the whole concept of the bill, because they realize that there's a lot of provisions that are beneficial. What a number of organizations have done, including some that you did mention, is that they have open up and raise their voice on some specific provision that they think the government should back down on. So maybe, for example, the VAT increase. So a number of people spoke about the VAT increase, for example. And some of those who complain, sometimes it's because the broader provision within the finance bill wasn't properly understood.
Okay, unfortunately, we're out of time. Thank you so much. We do appreciate your appearance this morning on the show, Mr. Olugbenro from Deloitte, the tax specialist, if you like to call him. Thank you so much.